Puff the magic dragon lives by the sea. What me? Where am I? Hello. Going to be discussing trading journals. But first, I'm getting a visitor, and I'm glad she's here. Say hello to everybody.
Hi.
The supplier of coffee, because we all know Scruffy likes a coffee. And for those of you who've never been here before, that makes no sense whatsoever. So let's roll the intro, and I'll tell you all about it. Hi, welcome to the channel. If you haven't been here before, my name is Langers, and I am the Scruffy Trader. That was rudely interrupted by my better half, the love of my life, Winky. So what I'm doing with this channel is trying to put trading in the real world. And that's why you'll always see me kind of at home or at the working office I have in Winky's business. And nothing scripted on these channels. It's just me, a camera, a cup of coffee when she brings it up, and those screens. And I trade live in front of you, a little bit of education, not to teach, but just to point you in the right direction. And a little rant every once in a while, because I'm old. But last week, I was doing a London breakout challenge, just because one of you guys had asked if I would check it out. And I traded it very successfully through the week. One chart, cable, one basic premise, a breakout of the London opening hours. And I recorded it each day on a trading journal. And that's what I want to have a little chat about. You see, I've had a number of emails asking about the pip counter that I've added into my sheet. And if you check how I fill in a journal, you'll see why I record, and I'll drop the link to that video below. But I never actually explained why you should have a journal, and that's what I want to address today. And then I'll jump on and I'll show you the pip maker. But first, whoa. You're gorgeous, you aren't you?
Oh, because you got your coffee.
Too right. It's amazing how easy I can be pleased, isn't it? The other way is when I have my toys. But that's me just being an aging child. So I digress. Why should you have a trading journal? Because I speak to a number of guys and I do ask, do you record your trades? Because I never actually understand why they're losing. And they all say, no, not really. And when I ask why, it's normally because they don't want to see the losers. But that's exactly why you should have a trading journal. You see, your trading journal is your roadmap to success. And it's lovely when you're filling it in and you're putting the positive figures. Oh, I made a tenner, I made £100, or whatever it happens to be. And you're all excited and you're filling that in and you think, brilliant. But then you've just lost 250. You're deflated. And when you're deflated, you don't want to do things. So you'll not record it. You'll kind of push it to one side and think, I'll start again tomorrow. Because tomorrow's it's going to be the day tomorrow. I'll just fill in the positives from tomorrow. Because I've got it sussed now. But you haven't. Because tomorrow you're going to repeat the same mistake. And by some good luck fortune, you might hit a profitable day. And you think, I'm on a runner. But the day after the next, you lose again. So you're deflated. And that's why I constantly tell you that trading is more a head game than a technical game. The charts, as I proved in that London breakout, are pretty easy once you understand the mechanics of them. The hard part is yourself. It's knowing how to hold on to a winner, which you saw me do across the week. It's also how to kill a loser, because if you think that you're wrong, you are wrong. Kill it, because you're better off losing £100 than letting it run and turning that 100 into a negative 300 because you've been a bit silly. And your journal can help you with that, because what you want to be doing is focusing on where you're going wrong. And I'm going to jump on the screen just now and I'll talk you through a couple of bullet points, and then I'll show you how the pip sheet works as well, and we'll take it from there. But I do implore you to record your trades. This is where this video channel came from. I religiously fill in my trading journal, and part of that journal is recording the trade in a video, a video capture the trade. Not so that I can gloat over a win, it's so I can replay it back if I've lost and understand why I've lost. And then that's what makes me better. And over the years of doing this, it's made me able to spot mistakes very quickly, which is why I very rarely have a red day. I have plenty of losing trades, but I don't lose many days. And I've proved that with all the live trades that I've done. I've yet to see anybody put up as many live trades as I do. And every single one of them is uploaded the same day as the trade, so it can't be manipulated. You'll know exactly where I got in and exactly where I got out. And then I'll show you the P&L so you can actually see the numbers in front of you of exactly where I got in and got out. So I don't hide anything, But all that is, it's just a snapshot from my journal. And I need that. So let's go on the screen and we'll have a little chat. Okay guys, so this is a sheet that I use to record my trades and work out targets and compounding and all sorts. I have it all together just so that I haven't got multiple sheets. And it's very simple. Summary page, exactly what it says it is, to summary. This section here is a snapshot of my day trades. This one is an overview of my swing trades. This, that my little bobblehead is hiding, is a graph of the day trades equity curve. And I also set a wage for myself of 10% of my profits that I take. So that's there, but I can change it to anything I wish. The swing trades is then blown up slightly on here. And again, I just put in the totals down there, works out the equity curve, and then tells me each month whether it's good, bad, or indifferent. And then on this side, this little section here tells me exactly how much of a percentage I've increased each month on the balance. So it's dead simple. I then use January through to December, and I fill my trades in on this. And it's broken down into weeks. It tells me how much my bid can be, what my max risk can be. But more importantly, and I'll just move my bobblehead out the way, this is the bit that I want to focus on. It's very easy to fill in. You put your size in, your stop, your P&L, whether you were long or short, that sort of thing. But it's this section here that I look at the most. So if I had £1,000 to start with, I did £1 a point, I had a 30 risk, I made 60, I went long, I was on cable, simple things like that. So you just fill in very quickly, and all it's telling you straight away, I'm risking 30 quid, but I made 60, and that is there. So I risked 3% of the £1,000, but I made 6%, which was a return of 2 to 1. Okay, so that's good. So that's very good information straight away before I've even looked at anything. I know whatever I did at that point made money, and the risk was intolerance. Okay, so very, very quickly. But I write down my moods. Was I in a good mood? Yes, no. Was I agitated? Was I tired? All that sort of stuff. Did I follow the rules for the strategy that I was in place? Yes, no. And then across here, I write notes based on this. I was tired. Because I was tired, I didn't follow the rules. I got in too early. I got in too late. All of these little different, just jog notes so that I know if I look at this particular trade that I took, what kind of state I was in when I took the trade. And then if I start seeing that I was tired all the time and I was losing, I go to bed earlier because I'm clearly just not getting enough sleep, or I'm overdoing it and I need to take a break. Am I agitated? Why am I agitated? I've just lost 8 off the run. So I need to take a break. And the sheet tells you this all the time. It starts mapping out why you were losing if you've got notes. But if you try and think back to a month ago, because you could be in a similar situation, you think to yourself, was I tired then? I don't know. I can't remember. It was a month ago. Was I agitated? I don't know. It was a month ago. But that'll tell you because you've wrote it down on the same day that you took the trade. So you know what kind of state you were in. You know if you followed your rules. Now, if you have 8 losers and you said, I was in a good mood, I followed my rules religiously, and the market conditions were X, Y, or Z, and I still lost, then you know it's not you that's the problem. It's the strategy. So you then have to start looking at where it stopped out. How far did the market move further down? You know, were you maybe 20 pips out of where your stop should have been? So you haven't read the structure correctly. And if that's the case, your position size is too high because you need to keep your risk in tolerance. If you half your position size and increased your stop, that might have worked for you. And that's what your journal does for you. It roadmaps these areas. And when you're working these things out, that's why this sheet here is important to me. If I'm doing a strategy and it has, let's just say, a 60% success rate. I've looked at 100 trades based on a standard stop of, say, 50, and it won 60% of the time. You know, it went back into positive. This part here will roadmap that for me. So I know I've just said it's 50 stop. Right? So my stop loss is 50. I looked at it and I had a success rate of 60% of it going into a positive. So I'll put 60 in there. I am looking at a pound a point or 150 just to change that. Okay. So it's now telling me I will lose £75 for every trade that goes wrong. All right, 60%. So I need to now work out this, and it's very simple. There's your win rate. Just drag that down onto 60. Move that out because this is based on 100 trades. All right, so it works your percentage out. So that is there. All right, 60%. It now needs to tell me how much I need to win to make it work. So if I'm on a 1-to-1, I will lose £3,000 across 100 trades, but I will win 4,500, making me a net profit of 1,500. If I could actually get that to 1.5, that's how much profit you make. So again, your win rate becomes important, but that is derived from your journal. You see, your journal tells you how many times you win and lose and whether your strategy is working. Then you back test that strategy so you can get a percentage. And once you've got a percentage, you can then work out what your win rate needs to be. Because let's, for argument's sake, say, well, I'm looking at a moving average cross, which are notoriously low win rates. And let's just say it's 35%. 35% of the time, it wins. Okay, so that's there. Stop loss, we'll just leave it 50, just for argument's sake. Okay, but now we need to change the parameters slightly. So there are your losers, and there are your winners. Okay, so at 1.5, your expectancy, which is here, you're going to lose over a period of time. So you need to now change this. There you are. You need now a minimum of 2 to 1. So for every 50 stop loss, your target is going to have to be 100 or thereabouts. And then you will make a small profit. In order to make it a good profit, if you up the ante quite a bit to 3 to 1, then it starts doing okay. But you will be losing more than you're winning. And then if you have this recorded in your journal that you're expecting to lose 6, 7 times before you hit the winner, then you feel better. But if you do it without this knowledge, you'll panic. And then you'll tinker and you'll have a tendency to system hop. You'll think, right, this system doesn't work anymore. I've lost 5 times. I am not doing it no more. I'm doing something else. And then you've got to go through this whole nightmare again. And that's why you stand still. But if you stuck with your original system, you knew you're going to lose 7 times, and you've lost for the 5th time. So what? You still got another two goes before you go into your winners. And this is what this is all building up about. Okay, so that's why your journal and your win rate are important. I do have other little bits in it, like my wage calculator. What this is just works out what size pip I need to get a certain amount of money and what it will give me on any given day. So for argument's sake, there's 50p per pip. If I want 30,000 a year, I need to do 250 pips per trade, and I need to make 25 of them. It's nigh and impossible. It's not going to happen. But if I did it with just 1 trade a day, averaging 10 pips, I would get £5 a day, £25 a week, and 1,200 a year off 50p. There ain't a bank in the land will give you that. So that becomes a good expectation. You know, and if you want to work it out into a wage, let's have a look. There's £20,000, £8.70, which isn't out the realms of possibility, guys. You just need to trade once a day at 10 pips, and that will make you 20 grand a year. Okay, dead simple stuff. Right? But the last part of what I'll discuss is this. I'll just move my bobblehead down into the bottom corner. I've adapted it slightly just for the guys that donate and want this, to make it a bit easier. This works out how many pips you've made in a day and what your positions are running from day to day. And it's dead simple. So if you had any running from last week, so you had a couple of positions run across a weekend, you would put it into there, you know. So you might have had a couple, but we'll just leave it at 0, so it's a blank streak. But if you had 2 in there, that would be it. So Monday morning, you're at the keyboard, ready to rock, and you've made 5 trades today. The way the sheet works is very simple. It's telling you your open positions is 5. And it is assuming until you tell it otherwise, you're going to hold them 5. All right, that's why there's 5 in each column. The next section is only interested in the trades that you cash out on a given day. So for argument's sake, we are going to cash out 3. 3 closed in that day, and you made a tenner. You lost 4 quid, and you made 15. And each one of them, for easy figures, was £1 each. £1 a pip, or tick, whatever you want to call it. All right. So we now know, because there's your ready reckoner above you, 3 have cashed. So you can just write in there 3. Okay. And it quickly reckons up what your cash total is, which is this one here, and how many pips you made in that day, which is 21. So you could then go to your wage maker and go, well, there we go. You know, I made 21 pips, which is double my daily average. What will that give me? You can play with it all the time. Nice little data information, and that's all these sheets are. They're just information. I didn't part close any out, and I've held 2 overnight. So it now assumes I'm holding those 2 overnight. So the next day, I come in and I get ready to start. I already have 2 positions open, because it's told me. And I open up another 5. So I now have 7 positions open. And I'm going to trade out 6 of them. So I made 15, lost 6, 22, 45, 11, and lost a 5. Okay. But this is where it changes. So we did a pound. We did a pound. This one we cashed out at 50p. This one we cashed out at 50p. Pound and a pound. All right. So it's telling me I cashed out 6, but I part closed 2. That's what those 50p's are. So I know I part closed 2. So now what it's doing is it's telling me, yeah, I cashed out 6, I part closed 2, but it left me with 3 trades running overnight. Okay. Come into here. We open up another 2. The part closes that I had were 50p each. They cashed out today. And the others ran. So made 2, 2, minus 6, and 7, just for argument's sake. All right. So cashed out 4. And there we go. And you're just building your sheet up all the time. So it's telling me now, out of all of these, that 5, cashed the 4 out, there's only 1 left, runs into the next day and so forth, and you carry it on. And then at the end of the week, whatever's in this number goes there, and you start the process again. And all it does is give you a quick snapshot of how many positions you're running overnight, how many you've part closed, and how many pips you've made. And once you've done this over the course of a few weeks, you can start working out what your averages are. So you know you're averaging, well, let's just say this was the full week, 126 pips a week. And you can then start thinking, okay, if I'm doing 126 pips a week, I want 250 quid. I need £2 a point. So it all comes back to working out what you need and where you need. Because one of the secrets of success, yes, you get paid by position size. But if you can have a position size that's comfortable to your wage expectation, not actually risking as much as what you probably need to. You know, you might have an account that can take £5, £6 a point. But if your wage expectation is 250 quid and you're pulling in 126 pips a week, you then only need to have that dialed down to £2 a point. You will still get your wage, you will protect your account for another day. And then if you want a little bit of a bonus, maybe it's the last week of the month, dial it up a little bit. Do £3 a point, and that's your bonus. But what you've done is you've road mapped your trades throughout the month into a safe environment. And what I mean by that is you're not putting your risk at maximum all the time. The less you risk, the calmer you will be. You know, when I'm at my full whack, you know, it's very stressful. But if I'm at, last week was a breeze for me. I was at less than a fifth of my position size. And if it went wrong, it wouldn't have hurt me that much. It was less than 0.5% of where I needed to be. So I wasn't stressed in the slightest. You know, I was doing that at full tilt, I'd have been really agitated. So that's the premise of what a journal is all about. You know, it's road mapping your trades, it's road mapping your risk, but most importantly, it's road mapping yourself, because yourself is the biggest barrier in trading. Control your head game, and the rest of it becomes easy. And I've said it before, and I'll say it again. There's a very famous saying by Socrates: know thyself, it is the beginning of wisdom. And in trading, there is no truer words. So there we go. Just a very quick exercise to kind of explain why I use a pip calculator, how important a journal is, and then how you use that to make less risk trades. Okay, so I'm going to enjoy the coffee. It's Sunday, so that means it is definitely Star Wars Day, and I'm going to enjoy it. So remember, guys, do what you love, money will follow. See you all in the next one.